This conference will now be recorded.
Okay, so today actually the topic is not usually I will not discuss this topic this time, but a little bit advanced topic I'm going to discuss today. Advanced topic. Okay, so the reason behind actually my system environment is not working for in both situations. It is not working. Here also it is not working, and there also it is not working. So now the today's session I will try to explain you about more about a new functionality, that is consolidation process. So before going to start, anyone has any doubts, so that I will try to give clarifications very first today. Anyone has any doubts? I hope no doubts.
Sir, Satya sir.
Yeah,
Yeah,
please,
just
please.
general doubt. Yeah. This is for purchase order posting, purchase invoice posting and the product receipt posting.
Yeah,
So while
okay.
posting the product receipt, there is an optional like if we can post the voucher, we can create the voucher, we can create. If we want to skip, we can skip from the parameter. Somewhere in the setup.
Yeah, yeah.
Is it right?
So there are two here. Okay, purchase order creation, purchase order confirmation, product receipt, and then vendor invoice. This is must. Vendor invoice posting, it is must, but only product receipt, this is optional. This is optional. So this optional also I told you, like usually the reason I have explained in last like 2 days before. Suppose we have received the material, we have not posted any transactions. I mean to say there is no transactions posted at the time of product receipt. Suppose your setup is like that. Okay, then in the system it is showing 25 lakhs. 5 lakhs worth of material I have received from the vendor but not updated. Invoice is not received, so it was not updated. Then in the system it is showing 25 lakhs, but if you go in the warehouse it is showing 30 lakhs worth of material. Then there will be a misunderstanding in terms of the top management may misunderstood. That is the reason we need to make this as mandatory. This is a parameter setup, remember?
I remember.
Yeah, so the best practice is always you can make it like ledger account should be posted at the name of product receipt also. This is the only one, it is optional, but this is mandatory. Without postings you cannot do. I mean to say ledger accounts must be posted during vendor invoice. During product receipt, this is optional. Whether you want it or not, you can take the decision. Clear?
So yeah, so see, if I enable voucher posting at the time of product receipt, so and while posting the vendor invoice, so it means 4 transactions will be posted while posting the invoice. 2 is for
No.
reverse of the product receipt, 2 is for
Yes.
vendor summary, and
So it is actually 5 lakhs. Okay, so let me show you. This we have discussed, but let me clear your doubt. Purchase order is created at that time, 100 items at the rate of 5,000. It is 5 lakhs. Okay, 5 lakhs. Now tax is like 5,000, 50,000. Suppose 50,000 is the tax amount. And then transportation charges, I have not explained this transportation charges, I'm going to explain you later. It is 20k. This is we have entered in the purchase order. All these things we have entered in the purchase order. Now during product receipt, it will update 5 lakhs. Only 5 lakhs it will be considered. During invoice, it will update 5.6 lakhs, because 50,000 plus this one, it is 5.6 lakhs. It will be posted. This 5 lakhs will be reversed. This will be reversed. That's what we have discussed. Let me go to the file. I'm sorry. Remember, these 5 lakhs debit which will be posted credit. This 5 lakhs credit posted to debit at the time of invoice. So this will be nullifying this voucher, and this is the final postings. In this example, I have taken 25,000 and 10,000.
Yeah, that is a perfect example. And in case if we disable posting at the time of product receipt, so in case of posting the invoice, there will be only two dimension
Exactly.
inventory. Okay,
Only three. This are zero
three,
also.
yes, three, zero also, yes.
Yeah,
Yeah, thank
exactly.
you.
Same in invoicing, customer invoice, same concept. Normally 4 at the time of invoice. Packing slip 2 transactions posted, it will be reversed. Then it will be 6. If you post temporary accounts, actually this is a permanent accounts only, but business people, they will use the word temporary accounts. Okay, these accounts, if it is posted, it will be reversed. Then it will be in the invoice, it will show 6 lines. Otherwise, it will show 4 lines.
Regardless of item nature, like whether it is stocked or not stocked.
For non-stocked item, this will not be posted, because you will not have quantity. If you don't have quantity, you don't have packing slip. The reason why we are doing non-stocked, we should not include in the inventory valuation. Am I right? If you are not including
Correct.
value, financial value also, it will not be there at the time of packing slip. But financial postings, yes, it will be there forever. But for this one, if quantity is not there, there is no financial postings for a non-stocked product. Okay.
Yeah, got it. Thank you.
Okay, fine. So unfortunately, today's system is not working. I mean to say, some major issue, I think, inside. That is the reason to both systems are not working, means something went wrong. I don't know. So for time being today, what I'm going to explain, like, actually this is advanced topic, consolidation. Actually this topic will be covered after another like after 2-3 weeks after, but I'm starting now because the system is not there. Okay, what is this consolidation process? This is one of the advanced finance topic. What is this consolidation? Okay, I have a company in Hyderabad. I have a company in Mumbai. Another company in Mumbai. And another company in Singapore. One is Hyderabad. Another one is in Mumbai. Another one is in Singapore. Now I want the consolidation report. I want consolidation report. What do you mean by consolidation? Here there will be one company. In this company, I want to see combined of Hyderabad, Mumbai, and Singapore transactions together in the system. I mean to say, combined profit and loss account or income statement trial balance I want to see. If I want to see the combined trial balance or balance sheet or P&L, then I can bring the balances from here to here, and I can bring the balances from here to here, and I can bring the balances from here to here, so that I can get reports whatever I want. So this consolidation process will execute main accounts and financial dimensions only. Main accounts plus financial dimensions only. And finance like category also there. Main account categories. So that main account categories, what it means, I will show you in the system tomorrow most probably. Okay, so for this accounts only we can combine. What do you mean by like this? Means suppose some customer balances here, some customer balances here, some customer balances here. I want to combine customer balances from here and here and here together here. I want to see means you cannot. Individual customer wise balances, if you want to combine in different companies, no, it is not possible. It is possible only main accounts. That means here travel expenditure, here travel expenditure, here travel expenditure. I want to combine all these three companies travel expenditure here. Yes, I can see. Flight expenses. Here I have flight expenses. Here I have flight expenses. Here I have flight expenses. All together I can combine. I can see here all total one like flight expenses total together. Customer balances means C001 is one customer, C002 is two customer, but these customers are mapped to one ledger account, that is summary account. Yes, that is possible. Summary account means accounts receivable domestic, accounts receivable international, accounts payable domestic. We are having that ledger account. That ledger account is a main account. We can combine here and here and here and here. You can combine here. So from here to here and here to here and here to here, we can combine all these things as a ledger balances. But individual customer balances we cannot transfer. So here, if you are doing consolidation process in the system, it will be moved the data which is exist in general ledger, you will find main accounts. That main account balances will be transferred. Main accounts balances will be transferred and main account balances will be transferred. And you can see consolidated report related to GL, but not customer, vendor, and like that. Understood? So in this company, you cannot enter manual entry. You cannot post any transaction. You cannot post any transaction in this company, but transactions can be posted here. Okay, and you can bring the balances from here to here. That is consolidation process. That is consolidation process. Understood high level information? What do you mean by consolidation? Any confusion, or can you able to imagine? Yeah.
So the main company, what you're saying, is also one of the legal entity?
Yeah, exactly. This is also one another legal entity.
Okay, thank you.
So this is also another legal entity, and this legal entity this legal entity, in this legal entity, we cannot enter manually any transaction. Means general transaction like vendor invoice, vendor payment, customer invoice, customer payment. Those things we cannot post in this one. So in while creation of a company, there is consolidation checkbox is there. Consolidation checkbox will be there in creating a consolidation company. At that checkbox, if you enable, you cannot post a single transaction. It will be only bringing the balances, but you cannot post the transaction. Consolidation and elimination process. There is
So, sir,
elimination.
even though customer transaction, vendor transaction, we cannot do?
Customer transactions, vendor transactions, individual transactions, no. But ledger account transactions, yes. Because while posting, we are posting transaction here, automatically it is posting to summary account. Am I right?
Yes.
So customer transactions, I'm sorry, customer transactions will not be transferred, will not be moved. But ledger transactions, yes, it will be moved. These transactions will be moved from this to here. But whereas customer transactions or vendor transactions, no, this will not be transferred. It is only ledger transactions. Understood?
Yes. So even in the parent legal entity in the consolidation where we are doing, there also we cannot do the transaction for customer or vendor.
No, no, we cannot post. So you
Okay.
are enabling this checkbox. Then in this parent, you cannot. So you cannot post any transaction related here. Any transaction you cannot post if you enable this checkbox. Because first you need to enable this checkbox. If you enable this checkbox, that means you are using consolidation process for this company, and you can bring the balances from here to here and here to here and here to here. That's it. Okay.
So, sir, what I see, just only the consolidation process is used to see all the balances in different legal entities.
I'm sorry. I'm back.
Yeah, this consolidation process is basically used to see all the balances from different legal entities.
Yes, exactly.
Okay.
Okay. So in some companies, what the structure will be there? There will be a parent company. For this parent company, once it is created, from this we can create child companies. But in our Dynamics AX, we don't have like this concept. We have independent legal entities. And I can create at any point of time one legal entity, and I can make for this child, I can make this is a parent. I can create one more legal entity. I can make this for this is the parent. Got my point? We are assigning parent company to the child company, but not like this. Because what is the benefit of this one means at any point of time you can create parent one company, and you can tag, like suppose I want like this one more, and I want to combine this, and I want this, and I want this. Yes, I want this. Yes, I can create. This is possible. This is child is linked to parent. From parent to child, you cannot define. Once again, I cannot create one more parent. Here we are mapping child to parents. So in this, child companies may have multiple parents. Whereas this design, if you have a parent, if you are creating child, I want this child should be mapped to some other parent, not possible in the system. This is not possible. So some companies, some ERPs, they will use this hierarchy also. But in Dynamics AX, we don't have this hierarchy. We have this hierarchy. The main benefit of this one is like at any point of time, I can create one parent company, and I can combine this company, this company, and this company only A, C, D. Suppose, yes, I can combine. I can create one more legal entity. Understood? The benefit of parent mapping. In this design, you cannot create new parent, but here we are creating independent companies. All are independent, and you can combine these two into one legal entity, or this like this. Okay, clear? Any doubt in this? Okay, I hope it is clear to everyone. Okay, now in this, suppose the chart of accounts are 6020 is the transportation charges. In this 600200, 600510 is transportation charges. In this, it may be 60220 transport charges. Now, how can system combine this onto this one? If it is all main account, all legal entities are using the same set of chart of accounts, no issues. Here also same, here also same, here also same, then it's fine, it's not an issue. But if it is differently, if it is same, no need to worry. You need not to map anything, further more setups. Simply you can do a consolidation process, you can get the balances. But in case if this legal entity, Hyderabad legal entity, is following like 6020, 6030, 6040, 6050, like this number sequences they are following, and this transportation charges, like Mumbai company, they are following 6-digit number, and this is differently. Then what I have to do? Understood the question? Question? Okay. If in this case, if it is in this case, 600, 510 I have entered in this legal entity, one set of chart of accounts. I'm using this one. So for this it is fine, same set of chart of accounts, but for this it is different. So in the system, there will be this ledger account will have one consolidation. There you can map 600, 510. Within this account you are mapping here, and in the same manner here we are mapping consolidation 600, 500. Understood? For this also it is available consolidation. Here it is not required to map anything. No need to map anything here. No need to map any number account here. Then automatically in this it is not required, but because this account and this account both are same, no need to map. But for this account you need to map. Like this, for all accounts you need to configure consolidation number in the legal entity. In the legal entity you need to map all these things. Understood? Any doubt here?
So, sir, one question here.
Yeah.
So, which means, for the Hyderabad legal entity and the Singapore legal entity, you are creating one more main account, 600, 510, and then making consolidation?
No, we are not creating one more chart of account. We are entering one text will be there. There in the text you are entering this number. That's it. It's a
Okay.
text. It's a text
Okay.
field. Yeah, exactly. You are right, Venkat. Like whatever your question is correct. So here, the perfect question. But here, simply we are entering only text, simple text, so that it will be. So this is a one-time job for every for consolidation process. This is a one-time job. You need to map it so that it will not like while doing consolidation, system can understand 600510. Whenever it is touching this 60510, then it can understand like this is a transportation charges, and it will bring here related to transaction 6020. It will come and it will combine here, and I can see all the transportation charges in the system. Okay, only one this point is uh, like a task to you to consolidate. Remaining all are same, simple. You can proceed and you can do consolidation and you can generate the reports. Okay, I told you reports will be generated for main accounts, financial dimensions, and main account categories. Okay, main account categories I will show you tomorrow where it is, what it is. Very simple. Okay, of course this I will show you practically tomorrow. This is one topic, consolidation process. Whenever I'm discussing consolidation process, once again I will discuss the same points and then I will show you in the system. So it will be like second time, once again I will explain and I will show you. Now one more topic I would like to discuss today. Another topic is year-end process. Year-end process. Anyone has any idea? Year-end process? Year-end process or year-end close?
You need to
So
do the roll
closing
forward.
Yeah. Yes, please. Yeah, someone.
Yeah, you need to do the roll forward for the retained earnings.
Exactly. You're right. To transfer the retained earnings. Okay. So any more explanation? Like you're right, Nilu. Anyone has little bit more details? Yes. Anyone?
So Satya, on the year end, every legal entity will have their own retained earnings to be transferred to the following years. There is an year end exercise to do the roll forward,
Okay.
and the P&L items are actually converted into retained earning for the following year.
Exactly. You're right. Yes. So that's what my question here. See, chart of accounts are classified into assets, liabilities, equities, sales revenue, cost of goods, expenses, income. This is actually other incomes, and then appropriation. Okay, so at the end of the year, at the end of the financial year, these balances will be transferred to the next year. These balances will be transferred to the next year, whereas these balances will not be transferred, and it will be consolidated, and net amount is a profit to my organization. So in India, it is April 1st to 31st March. In India, it is April 1st to 31st March, whereas in USA, it may be from July 1st to 30th June, or if it is expiry 1st to August 31st. In some companies, they are following differently. In some companies, they will follow Jan to December. So depending upon the government authorities statutory, you are following financial year. Now, I'm sorry. In India, suppose April 1st to 31st March. April 1st to 31st March. In India, April 1st to 31st March. At the end of the year, the financial year, we need to arrive what is the profit or what is the loss, net profit or net loss. One is gross profit, gross loss, and another one is net profit, net loss. So it will be like accountants, they will do calculations a lot. Okay, and then at the end of the year, I mean to say at the end of the year means 31st March 2021. 31st March 2021, the balances of like expenses and income, net effect will arrive a profit for the entire year. What is the profit? Suppose I have invested 50 crores. At last, I got 2 crores as a profit. 2 crores as a profit. That profit will be transferred to investors. Who has invested money? If it is suppose 4 members together, they have started business, then based on the amounts they have invested, based on that proportionately it will be paid to these investors. That is called retained earnings. The profit or loss amount, the profit and loss amount, whatever it is there at the end of the year, that will be transferred to one ledger account called retained earnings, that is profit and loss. And now for assets, liabilities, equities, the balances will be carried forward to the next year. Balances will be carried forward to the next year. What it means, suppose from one customer, like some for domestic customers, from the domestic customers, I need to receive suppose 20 lakhs, and international customers I need to receive 80 lakhs. Then that balances will be next year will be transferred. But whereas here there is a travel expenditure. Travel expenditure. This is travel expenditure from April 1st, 2019 to 2022, 31st March 2021. For this period, travel expenditure it is 85,000 suppose. Now next year, whenever it is starting a new financial year, this balances should not be transferred. Agree with me? The expenses are last year. Now this travel expenditure for the next year, it should be zero. It should be 0. That means all balance sheet items will be carried forward to the next year. All P&L accounts will not be carried forward to the balances. The balances will not be transferred to the next year. This all balances will become 0 only. For the new financial year, all balances will become 0 for the P&L accounts. For the P&L accounts, all balances will not be transferred. It will be lying inside only. Whereas balance sheet items, assets, liabilities, and equities, it will be transferred to the next year. It will be transferred to the next year. Is it clear? Any doubt here? Any confusion? So asset balances, liability balances. Here asset balances means, assets means, suppose take the example, I have a bank account. In that bank account I have 2.5 lakhs amount. So if it is financial year is changed, the same 1.5 lakh or 2.5 lakhs, whatever I have bank account balance, it will be carried forward to the next year. Another example, inventory accounts. So inventory I have suppose 5 crores 55,000, 5 crores 55 lakhs amount inventory is available on 31st March. Then April 1st 2021, the balance should be the same, 5 lakhs 55, like 5 crores 55 lakhs, whatever it is there in the last day, that should be carried forward. And asset balances, like another one is like suppose machineries or buildings. I have a building of 20 crores worth of building. I have the 20 crores worth of building, it will be carried forward to the next year. There will not be any like change in the amounts. Of course depreciation will be there, that we will discuss later, but balances in assets, it will be carried forward to the next year. And the same manner liabilities, suppose I have a loan, home loan, like last year 25 lakhs home loan is there. So 25 lakhs, I have paid 5 lakhs. Now 20 lakhs is the pending amount, home loan. That will be carried forwarded to the next year as a liability. Another example like vendor balances. For vendor balances, I need to pay, suppose 3 crores 25 lakhs, I need to pay to the vendor. Next year also, the same 3 crores 25 lakhs will be carried forward. So here, assets, liabilities, and equities will be carried forwarded to the next year. Whereas revenue, suppose through sales I got revenue like last year 23 crores 50 lakhs I have got revenue, 23 crores 50 lakhs. So this revenue will not be carried forward to the next year, because this revenue amount, this cost value, and expenses, incomes, and appropriation, these calculations you will calculate combined together. Net profit you will arrive. You means here accountants, they will do a calculations net profit. Once they have arrived net profit, that net profit value will be transferred to equities. Here in this, there will be one ledger account called retained earnings, one ledger account that will be transferred here. One ledger account is like suppose 320 100 something, 320 100 some ledger account, retained earnings, it will be transferred. Once it is transferred, it will be distributed between the investors. Between the investors it will be distributed. This is called year-end process. This is called year-end process. Understood this year-end process at least high level? Any doubt in this? Anyone?
No.
Okay, fine. Now, what are the prerequisites in the system if you want to do year-end process? If you want to run this year-end process, what are the prerequisites? One is a new, suppose this is a financial year. New financial year is April 1st, 2021 to 31st March 2022. This is old financial year. This is new financial year. This new financial year should be created. This new financial year should be created in the system. That is the prerequisite. Okay, for year-end process, the only one condition in D365 is like new financial year should be created. Whereas in 2012, this all these periods should be on hold. Now, what do you mean by on hold? So there is a confusion. New word introduced today. What is this on hold? What is this on hold? Okay. So in the system, I will show you practically tomorrow. Periods. Periods have three statuses. One is open, another one is on hold, another one is closed. These are the three statuses. What is this actually? Suppose we are in the month of February. In Feb 2021, we are in the month of Feb 2021. Now, the transactions, whatever I'm posting, in general, 90% Feb related transactions. 90% Feb related transactions. Then, in the system, the Feb month period will be opened. Actually, it should be opened. Open or opened, I did not remember the name exactly. Okay, we will see in the system. Here, this is the current period should be opened and previous periods should be on hold. Previous and future, usually the business people, what they will do, the organizations, the client wherever you are implementing, Jan, December, November, October, or future months, March, April, May, June, July. These months I will make on hold. I will make on hold. If you make it on hold, what happens? If you are trying to post any transaction in those months, it will not allow you. By mistakenly, if users are entering some transactions in the previous months or in the future months, then it will stop you. Period is on hold. Then what is this closed? What is this closed? Closed means if you make it, this is permanent close. This is temporary closing. If I make it on hold, I can change to on hold to open, open to on hold. I can change the status from open to on hold and on hold to open. That is possible. But if it is closed means it is permanently closed. Permanently closed. You cannot post any further more transactions if it is closed period. If the period is closed, you cannot post any transaction furthermore. What do you mean by this one? Means closed. Suppose 2011-12. I'm using this application. Suppose AX2012 I'm using. 2011-12, 2012-13, 2013-14. I'm using this application from last 7-8 years. Now in 2012-13, I'm not going to do any transactions. It is already closed and I have already submitted to the government authorities statutory reports. I'm not going to do any transaction furthermore. It is freezed. Then for that periods, I can make it on closed. 2013-14, I'm not going to make any changes. Yes, I can make it closed. 2014-15, I am not going to change, closed. 2015-16, suppose there is a discrepancy between whatever I have submitted. So government authorities are verifying my balances, my reports, my documents, they are verifying. If it is required, I need to pay some penalty or something because some miscalculation, something like 2017-18, something 3 years back, transactions books is verifying. Usually it will not be delayed this much. Last year transactions will be, I mean to say 1920, 2021, 1920 transactions with books will be freezed in 2021 usually. But if it is in case any government authorities are verifying, validating your books of records, then I will keep open for last at least 3 years. At least minimum to minimum 3-4 years books, it will be opened. If it is required, we'll do some calculations and we'll submit to the government authorities. But before 5 years back, you are not going to modify any transactions. So for those periods, I can make closed. I can make closed. I'm sorry, close. So understood what is this means? Periods open, on hold and closed.
So, sir, once we close the period, we cannot open it further.
Yes, yes, you cannot.
Okay.
You cannot. So that is the reason usually we don't close the periods. We don't close the periods. We will make it open and on hold so that I can modify at any point of time. Okay. Now in 2012, if you are doing year-end process, year-end close or year-end process in 2012, then last year balances, these periods should be on hold. That is a precondition required in 2012 version, because we are, some people, you may working with the X2012 version 6.0, 6.1, 6.2, 6.3. Okay, then in that case, if you want to do year-end process, you need to make changes for the periods like April to March. You need to make it on hold, and then new financial year should be created. This is for 2012 version. Whereas D365, it will not validate on hold or open, no issues. You can do year-end process. Okay, this consolidation process and year-end process, in the system it is simple buttons only, simple buttons. But whereas understanding is little bit more efforts required. That is the reason I have taken these two topics and have discussed. Any doubts in these 2 points? Anyone has any doubts?
So
Virtually,
one
I'm encouraging.
question.
Yes, please. Yeah.
In 2012, you said all the periods should be on hold before creating the new financial year periods. So what is the difference for the 365?
So in D365, if you are running this year and closing, in D365, it will not verify whether the previous financial year, last year, is on hold or open. It will not validate. It will not verify. Whereas in 2012, it will verify whether it is on hold or not. You need to make it on hold.
Okay.
Because this year-end process you will execute in the month of April 2021. Am I right?
Yeah.
In April or May, you are going to do it. So during that one, system is validating. You can make it on hold so that we will not like year-end process will verify whether it is on hold or not. But in D365, this condition has removed. The reason behind, you are doing year-end process, some other people are doing some transactions. They want to keep, because D365 is a cloud environment, many people are across the world, they are using this environment. Then if you are making on hold, other persons will, it will create problems for them if they are posting some transactions. That is the reason this condition is removed in D365. Even it is open or on hold, you can proceed to run this process. Simple button. Okay, fine.
Yes.
Okay,
Thank you.
fine. So this is about year-end process. Okay, so today I have discussed consolidation process, and another process is year-end process. One more I will introduce today, foreign currency revaluation. Foreign currency revaluation. What is this foreign currency revaluation? Okay, so year-end process is a small one, consolidation is small one, but foreign currency revaluation is it is most important for everyone, because whenever you are implementing product in any client, if it is any exports and imports are there, then this foreign currency revaluation will come into the picture. So what is this? Let us understand briefly. Okay, take the example, forget about Dynamics AX, forget about this ERP and something. You are planning to purchase a laptop. You are planning to purchase a laptop with the latest model. You are planning to purchase. You have inquired. It is like a touch screen. Okay, if your laptop is a touch screen, and as well as some 32 GB RAM or 16 GB RAM or 32 GB RAM, and high-end features like a 2 TB hard disk, like this high-end features you have verified in India. You have verified it is in India. It is 85,000 rupees. It is 85,000 rupees. Okay, fine. You are almost yet to purchase. You are almost yet to purchase this 85,000 rupees worth of laptop. You planned and you are planning to purchase. It is you're purchasing. Now your friend is coming in the month end from USA. From USA, your friend is coming. So you have just inquired with your friend. So I'm looking for so and so configuration. This is the like RAM. This is the hard disk. This is the touch screen. I want touch screen kind of thing. You have given information. Then he is your close friend, and he is replying like, "Why are you investing 85,000?" Here it is in India, in USA it is 1,000 US dollars. He replied 1,000 US dollars. Just you have inquired with your friend and he replied like it is 1,000 US dollars. Now immediately you are going inside, and what is the rate? You have verified. It is 72 rupees 87 paisa. That means if I invest 72,870 rupees, I'm getting this laptop. So so rounding, I'm just making 73,000 for easy calculation. Now what you thought, oh, if I'm asking my friend to bring this laptop, I'm going to get a 12 lakhs or 12,000 rupees worth of benefit. It is a profit to me. You thought it is 20, like I can like save 12,000 rupees. I can save 12,000 rupees if I'm asking to one laptop from my friend. User like my friend is coming anyhow, I can inform to my friend to one laptop. Then I can pay 73K. Now he brought this one on the day. All of a sudden, it is instead of 1,000 in 1,000 US dollars, it is instead of 73K, it was increased to 90 rupees. $1 equal to 90 rupees. Then it will be loss. Otherwise, if it is to 70 furthermore, meaning more profit. So here your friend informed to you like it is 73,000, so like $1,000, but you have converted and you have made it like 73,000. Now it is 70K. Then extra 3,000 rupees you are gaining. If it is became 80,000, I mean to say 80 rupees, then it will be 80,000. Then it will be like you are instead of 12,000 profit, you are going to get 5,000 profit only. Am I right? So here, forget about this one. So at the time of invoice, the price is different. At the time of payment, the price is different. Then because of this, there is a loss or gain to your company. Loss or gain to your company because of this exchange rate changes. That is foreign currency revaluation. Foreign currency revaluation means you are at the time of invoice, one price is there. At the time of payment, one price is there. Then the differences between invoice price and payment price, the differences are posted this gain or loss accounts. Understood the concept? So how it will be, like I have taken example laptop. Now how it will be applicable for your like in the system in ERP. Suppose take the example, you are going to bring machinery, or take the example washing machines, high-end washing machines you are importing from USA. Each one is $500. Each one is $500. So today $1 equal to 73 rupees. So how much amount you need to pay? Take the example $1,000 for easy calculation. Each one is like 500. So 2 washing machines I am purchasing, $1,000. Now how much amount I need to pay? 73,000. This is at the time of invoicing. At the time of invoice, it is 75,000 rupees, means $1,000. Now I'm doing payment. After 1 month, I'm doing payment. Now it is $1 equal to 80 rupees. Then 80,000 I need to pay. I need to pay 80,000 rupees. So then 7,000 is loss to my organization. 7,000 is my loss to my organization, because at the time of invoice it is $1,000. At the time of payment also $1,000 only. I'm paying $1,000 only, but I need to purchase dollars by spending 80,000 instead of 73,000. I need to spend 80,000 so that I can pay this 80,000 to the 80,000 means I will convert this 80,000 into $1,000 and I can pay to the vendor. Suppose it is decreased to 70, then I can spend only 70,000 rupees and I can get $1,000 and I will do the payment to the vendor. Understood? Because of this exchange rate changes, the gain or loss will come into the picture to my organization. That is foreign currency revaluation. So this will be applicable for imports and exports. Suppose if I am exporting, like if I am importing material from Dubai, then AED is Arab Emirate Dirhams. AED is my accounting currency. If I am importing material from Oman, Oman Rial is my importing currency, foreign currency. If I am importing material from Singapore, Singapore dollars. If I am importing from Malaysia, Malaysia ringgits. If I am importing from China, China yuan. If I'm importing from Australia, it is Australian dollars. So currencies will be different, and exchange rate between that currency and this currency I need to enter in the system, so that during invoice and payment, whatever the difference between invoice and payment, whatever the exchange rates are there, if it is a gain, it will be posted to gain. If it is a loss, it will be posted to loss. So there are 4 terms in the system: unrealized gain or loss, unrealized gain or loss. Okay, in detail I will discuss with you about this one: realized gain, realized loss, unrealized gain, unrealized loss. These 4 terms I need to explain you in detail. So whenever these 3 topics, once again I will explain in the session and I will show you in the system, so that you can imagine what I have explained. I know the entire topic, today topic, I have explained on the notepad, but not I have not shown in the system. Unfortunately, the network, the system is not working properly. That is the reason I'm not able to show you in the system, but we'll discuss once again and I will show you. Any more doubts? Anyone has any concerns? If nothing, then we'll stop for today. We'll connect once again tomorrow morning, 7 a.m. IST.
Okay, sir. Thank
Okay,
you.
thank you. Thank you. Thank you.
Thank you.
Welcome.